Greetings everyone, Jake Bernstein, Weekly Capital Markets Report. Trading lesson, 9:26 a.m. on Saturday, the 16th of February in Santa Cruz, California. Thanks for being here. I hope you're enjoying these lessons. Give me your feedback. And again, apologies for the voice. Slowly, very slowly but surely it's getting better. Today's lesson. You can't use a microscope to do the job of a telescope. You can't use a telescope to use the job of a microscope. A mistake that traders often make. Telescope is used to see far away, to see the really big heavenly picture. Microscope is used to see up close on a cellular or microcellular level. You can't use a microscope in order to predict the long-term trend. You can't use a telescope in order to predict the short-term trend. It's a mistake that traders often make. As an example, there are two telescope tools that we have. Number one, the cycle, which gives us the big picture as shown in red on the screen. Number two, the commitment of traders report commercials. Are commercials net long or are they short? The green area shows commercials net long. That's all I care about in my work. So notice how, on the left of the chart, prior to some big up moves in gold, in fact prior to the biggest up move in the history of gold, commercials were consistently long the market. The current move to the upside was preceded also by commitment of traders showing net long positions by commercials, which I illustrated for you in the weekly newsletter before it happened. Let's zoom in a little bit, still with a telescope on this chart, and go to a weekly chart. So right here we're looking at a quarterly chart. Going to a weekly chart, which is the lowest level of time to use for determining for using the COT, you will notice very prior to the big up move that we've seen, and make no mistake about it, this is a new bull market in gold. Commercial buying activity is shown right over here. You'll notice commercials were buying prior to the up move, and then we had a reaction down. You'll notice that commercials were buying after the bottom, consistent with the cyclical up move. That's how we use the telescope in order to predict correctly the up move that we're in right now. We cannot use effectively, at least to my understanding, COT data to predict a high. We use timing and divergence for that purpose. But right now, that's how the difference works between a telescope and a microscope. If you're looking at a daily chart, don't consult the COT. The COT only comes out weekly, and when it comes out, it's a week or two late. You cannot use the COT for a short-term move. Now, let me show you something else. Silver, again, prior to the current up move, right over here. Notice, and let me put the silver cycle chart on it. One moment, please. This should be the silver cycle chart. There's a silver cycle chart, and again, notice, right at the bottom, commercials went long the market. They bought again right over here. They were absent from the market right over here, but nevertheless, we did get follow through to the upside. Let me show you something else. Platinum. So commercial buying activity again at the low in platinum for the first time in a long time. Let me show you the chart. The last time commercials were heavy buyers of platinum was all the way back here. Well, actually, that chart doesn't do it justice. Let's go to a quarterly chart. A different chart is what we're looking for. One moment, please. I've got so many charts, I don't know what to do with them. Okay, so there's the chart. The last time we had buying in platinum was all the way back here, prior to the sustained multi-year rally in platinum prices. And you'll observe the level of platinum buying by commercials over here, and we can look at the number, numbers don't lie, was 3,885 contracts. Over here, it was 1,562. Over here, 1,391. Over here, it was 2,325. So it would be correct and factual to say that even though it looks small on the chart, commercials did the largest net long positions in history right over here. Now in my book that means bull market coming, but remember, that's the big picture telescopic view. You now need to go down to the microscopic view in order to deal with timing. So if we go to a moving average channel chart, for example in gold, let me show you what I mean. This is what the gold market has done subsequent to the commercial buying activity, which occurred all the way down here. So what looked like a small move on the futures chart, on the monthly chart or the quarterly chart, is actually a big move in terms of dollars on the daily chart. A move from approximately $12.10 all the way to $13.10, a $100 move, $10,000 approximately in futures. So remember what I said. You can't use a microscope to find a telescopic move. You can't use a telescope to find a microscopic move. I hope you're enjoying these lessons. And by the way, if you have not had an opportunity to join the new mentoring group, we still have a few openings left. It ain't cheap, but we meet 3 times a week. It's fabulous. It's been working out really good, and I'm getting some incredible feedback about it. Have a great trading week. If you have any questions, I'm Jake at trade-futures.com. Again, thanks, and sorry for the voice, or lack thereof.